Let's talk more about investing in tech and AI. Joining us for that is Geoff Yang, founding partner at Redpoint Ventures. Geoff, great to have you with us.
Hi, Melissa.
There's a lot of enthusiasm in the space, particularly on the hardware side, and I'm wondering, can we call that side of the AI picture a bubble, and where are we on the other side in terms of software?
Well, I mean, every decade or so, there's a platform that comes around that unlocks enormous value. And everyone builds on the last, and everyone historically has been bigger. And this one, I think, could be the biggest. So there's a lot of momentum behind it. You see it in the market today. In the private market, the AI companies are getting a substantial increase in valuation, maybe about 3x what other companies, and they're raising about 70% more capital. But they're also growing faster. By our numbers, these companies are growing about 2.5x faster, about a little over 450% year over year versus about 200% for the other companies we look at. And so, this is a very large and vibrant opportunity.
Do you think, if we are in a situation where companies start looking at their budgets carefully, and we could very well be in that situation at some point in time, is AI spending bulletproof effectively? Is this an area that companies have to spend on so that deployment will continue even if there are cutbacks elsewhere?
Well, nothing's bulletproof. Everything goes through phases and goes through highs and lows. But I really think this is something that is going to affect pretty much every company and how they think about their business and how they go about doing it. I think first you start with the models, and then you look at the infrastructure that helps implement these models. Then you look at the application that builds on top of these models, and then finally companies that will benefit from the productivity gains or build new business models are all opportunities. I think people using enterprises and end users using AI it'll be foundational in everything they do. It's almost like the internet became foundational in how you think about business, or mobile became foundational. I think that's how it'll be with AI. And as I said earlier, every trend builds on the other one. So I think this one could be bigger.
In terms of, we're going to show viewers the NASDAQ Redpoint Cloud Infrastructure Index, which you put together, and it has a lot of, it has publicly traded cloud companies. A lot of them have high valuations relative to the S&P 500, Geoff. In an environment where interest rates are higher, and it looks like they will be higher for longer, higher valuation companies typically come under pressure. This group is no exception. I'm wondering how you start thinking about that in terms of imputing the value of the private companies you are putting new money into if the public valuations are under pressure.
So let's just talk about the indexes for a second. We did this in partnership with NASDAQ, and Redpoint launched the first infrastructure index in June of last year. And we're tracking the top public companies in the cloud infrastructure space. And very much, you can think about cloud infrastructure as the picks and shovels to the modern economy, which powers virtually every industry and everything we do, including ordering food, booking travel. And it's industry agnostic and truly a horizontal opportunity. And in the category, it spans three major verticals: operations and developers, tools, cybersecurity, and data and AI. So in many respects, the discussion we're having about AI it should be incorporated in this. And we did it because we realized that the market was missing a pure play index in building cloud native infrastructure. And so a lot of the companies that you're going to end up seeing in this are going to be pure AI companies, in addition to the other companies that use cloud infrastructure as part of their business. And today they have about a $600 billion market cap, and they're very high growth with a median of about 20% revenue growth in the area. And, you look at these companies, and certainly they're going to be the valuation, because of all the technology companies in this space, are going to be tied to what happens with interest rate and interest rate expectations. And you see that certainly in the private market, as the private market flows into what public valuations can be. But we think over the long term, the revenue gains and revenue opportunities are substantial for these companies. And as I said, the market opportunity is enormous
Right.
For AI, and you're seeing it in the public markets with how the Magnificent Seven, is doing, and all of them have a profound AI story.
Hey, Geoff, maybe a bit of a curveball before we let you go. You're a board
Sure.
member of a whole bunch of companies, Franklin Templeton, Warner Brothers Discovery, and so many others. So you've dealt with governance issues. We've been batting around this issue of Elon Musk's compensation this morning, that plan put in place in 2018 that the judge overturned. Now the shareholders being asked effectively to reinstate the plan for work that was done prior. We just had a guest on that said that they thought it would be considered wasteful to pay them retrospectively like that. What do you think of this?
Well, it's a tough one because you've never seen packages like this before, and they're definitely the proposal is definitely carving new ground. But Elon Musk is also somebody that doesn't come along very often, and it is a lot of the things that they're doing, a lot of the things that he does is really practically only something that Elon Musk can do. So it's a tough one. It's hard to fathom a Tesla without Elon Musk, but they're also going in a space that's never been done. I think the original package was very much tied to performance and what happened to the stock price. And I think some of what they're trying to do is reinstate something that they decided to do before that the court said they couldn't do. I don't know what the right answer is. I think it would be a very hard comp committee to be on, but because it's hard to imagine a Tesla without Elon Musk at its helm.